that all is fine. Hello everyone, my name is Elizaveta Belugina, and this is the weekly webinar by FBS. We discuss the outlook for the major Forex currencies for the upcoming week from September 19th to September 25th. We share our trade ideas, and I greet everyone and hope that this webinar will be of use to you and that you will learn something important or gain some valuable information. Let us start with the presentation. Here it is. Firstly, I'd like to point out that it's very important to make weekly trading plans, probably during the weekend before the week starts, or maybe on Monday, as there are many factors, both technical and fundamentals. And to take all these factors into account, you need to sit down a bit to think upon what is going to happen, to look at the charts and look at the technical picture. And this will help you to create a plan for the week and to take into account all the information which is important. So designing the weekly trading plan is important both from fundamental and from technical reasons. Our agenda for today is the following. We'll look at how the Forex market is positioned, because market sentiment, market expectations, and the actions of large players are sometimes the most important things and represent the main drivers for the currency pairs. When we'll look at the economic calendar, and I can say now that the calendar for this week is very, very interesting, and this week is very intense. Then we'll come to MT4 and look at the technical charts, try to combine our fundamental knowledge with some technical ideas we can derive from the price charts, and then we'll sum up and lay out trade ideas which can be used this week. So let's begin. If you have any questions, don't hesitate to ask them in the charts or at comments to this video. Let's firstly review the dynamics of the main currency pairs during the last week. And from this chart, probably the picture is not very clear, but you can see that the greenback managed to strengthen versus all currencies except Japanese yen. Versus Japanese yen, there was a slight decline of the American currency. Initially, the past week was going to be probably a rather moderate week for the US dollar, but then we got more positive than expected inflation figures from America on Friday, and after that the bulls, US dollar bulls, managed to make sizable gains, especially if we look at British pound to US dollar currency pair. Here is it, and euro dollar, as well as gold declined versus the US dollar. And of course, taking into account the fact that the Federal Reserve's meeting will take place this week, of course, US dollar is going to be one of the main drivers on Forex and will surely be in the center of the market's attention. Some positioning figures from CFTC. Here we can see that the overall US dollar bullish position has declined a bit, but the dynamics didn't fall into bullish or bearish trend. It is more like the sideways trend we see here in the aggregate USD position. There are some interesting changes in the market sentiment for other currencies. For example, we can see that the bias for the euro remains bearish. However, this negative bias is decreasing, and there was a rather sizable decrease in this net bearish euro position. And if we look at this weekly chart, weekly change, not in the US dollar, from the US dollar value point of view, but from the number of contracts point of view, we will see that the decline in the euro short positions was the biggest since the beginning of January, and this is a rather sizable change for the Forex market. It surely reflects the results of the European Central Bank's meeting, which took place earlier in September. Back then, I can remind you that the ECB kind of disappointed the market by not being as aggressive in its monetary stimulus as some analysts thought. And as a result, we saw that traders, large speculators, closed some of the bearish bets on the single currency. Of course, positioning is still rather heavy, and we will probably see more of short covering for the euro. Bearish bias for the British pound also declined a bit. And here also the general situation is the same as with the euro. If British pound reverses from declining to rising, then there is still a chance that we'll see more of short covering of these bearish positions. And also pay attention to Japanese yen. It is, on the contrary, in net bullish position. So it means that the total number of long position on Japanese yen exceeds the number of short positions on Japanese yen. This shows that this net long positions are increasing, and the picture is rather bullish. However, we must ask ourselves what is the limit of this bullish position? How much further can Japanese yen increase? So it is not the beginning probably of some trend. It is somewhere past the middle of the bullish trend. So some insight in how the market is feeling about the yen is also derived from this information. If we look at the US dollar index chart, which tracks the dynamics of the American currency versus the 6 currencies which are of countries representing America's main trading partners, we can see that here the dynamics is also consolidative. We can see this big green bullish candle on Friday, then the US dollar gained on their better than expected US inflation figures. And more or less, dollar index is consolidating around 95.50 mark. And the currency will likely move very little ahead of the Federal Reserve's meeting on Wednesday. Here we can also see the dynamics of oil. It is the daily chart of Brent Oil, and Brent is our main commodity as well as WTI. Crude oil is our main commodity, and in Brent we see that the prices move between $50 per barrel. This is a kind of upside limit for the prices, and $45 represents support level. I expect that we'll see more volatility in oil prices ahead of the next week meeting of the world's largest oil producers, there will be probably more rumors, more speculation about the freeze in production, which may be negotiated by these large producers. So be aware of short-term swings in oil price. These short-term swings may be rather big. And despite the fact that the overall trend should soon reverse to the downside, there are expectations of more productions in nations like Nigeria and Kazakhstan. There may be some short-term bullish reaction on the expectations of the Energy Forum next week, but I doubt that any constructive decisions will be made at this upcoming event. So the market should soon be disappointed. And also we know that as the oil barrel quote is nominated in the US dollar, oil has strong connection and correlation with the movement of the US dollar. And the Federal Reserve meeting will also be important for oil price. So if you trade this asset or some commodity currencies like Canadian dollar, Australian dollar, New Zealand dollar, you should closely track the dynamics of oil as well. Now we move to economic calendar, and we'll see that probably I haven't included all upcoming events in this small calendar. Here are only the most important events, and some of them are events of really big importance, which can in no way be missed. They will affect the trading in all currency pairs, and probably some measures to limit risk. Some caution is needed ahead of these events. So tomorrow on Tuesday there will be the meeting minutes of the Reserve Bank of Australia. Also the US will release building permits, and we'll hear comments from the Bank of Canada Governor Powell. This will be probably a rather quiet day ahead of Wednesday, where we'll get firstly the meeting of the Bank of Japan and then the meeting of the US Federal Reserve. So on Tuesday, the market will probably feel the weight of uncertainty ahead of these two central banks meetings, and we'll see a rather small range trading when the market players will be unwilling to make any big bets on the currency market, and thus the price won't be moving greatly. Then there will be Wednesday, the main challenge for Forex traders, as we will have to take into account this central bank's meeting, these risk events. Then on Thursday, one more central bank, the Reserve Bank of the New Zealand, will announce its decision, and will get speeches from the ECB President Draghi and the Bank of England's Governor Carney. And I think that if something really big, something market moving will come from the Federal Reserve's meeting on Wednesday, then the ECB and the Bank of England's presidents will have to somehow react to the Fed's action and to say something in their speeches in order to also form the market expectations and to keep their currencies in the place where they want to see them. On Friday, we'll see only Canadian inflation and retail sales, as the most important event. And Thursday and Friday, traders will be digesting the decisions of the Bank of Japan and the Federal Reserve. I think that surely there will be much to digest because these are the benchmark events which will probably form the trends for the next couple of months and probably even until the end of 2016. So we can see that there is really much at stake here. And September meeting of the Federal Reserve. There is something to discuss here. This meeting is very long awaited. Finally, this meeting is taking place this Wednesday, and we can see that the current level of the federal funds rate is in range between 0.25 and 0.50, and the futures market sees the possibility of the Federal Reserve's rate hike at this meeting as equal to 15%. The possibility of rate hike in December is currently estimated by about 50%. So we can see that the market isn't ready to Federal Reserve's rate hikes. It doesn't really believe that this event will take place, despite the fact that there are US economic data are rather good, that we saw improvement in inflation figures on Friday. Still, the market players don't believe that this is the case, that we'll really see a rate hike. How to prepare to such event as the Federal Reserve's meeting? We'll see not only the decision on the rate, on the federal funds rate, but also the FOMC members will release their economic projections. We'll see the so-called Fed dots. It means that the Federal Reserve's members will share their own forecasts for the federal funds rate, and we'll see that they expect to raise interest rate this year or they don't. Of course, if we remember the last rate hike, which took place in December 2015, back then the projections of the Fed staff showed that there will be 4 rate hikes in 2016. For now, we saw none of these rate hikes. Maybe there will be something in September or in December, but of course 4 hikes is a very unlikely scenario. It's practically impossible scenario at this point. So of course the forecasts of the Fed members don't necessarily reflect future. The Fed can and probably will act not like they are forecasting, but still it is a rather important factor for the market's expectations. And we see that for majority of time, it doesn't really matter what will actually happen at the market, but more important is how the market evaluates different possibilities and what the market expects. These market expectations are the ruling factor for Forex market. So even if we have this forecast which says that by the end of 2016 the interest rate will be in range from 0.50% to 0.75%, which means 1 rate hike, then it will be a positive factor for the US dollar. You will see American currency appreciate because, as I have already said, the market is pricing a very low possibility of rate hike this year in the US, and if we have such forecast for a rate hike, the market will have to price in higher possibility of the rate hike, so it will be bullish for the US dollar. So watch the release of the FOMC economic projections. It will give you a pretty good clue about the Fed's attitude towards the rate hike. And also there will be a press conference of Janet Yellen, the Fed's chair, and she will be answering different questions about the US economy, about the Fed's policy. Usually the meetings of the Federal Reserve, which are accompanied by press conferences, are considered to be most important because it is believed that the Fed makes important decisions only if there is a press conference. So this meeting will be such meeting, it will be important, and market thinks that something may be said which will determine the future picture. And you can see in the table I have outlined some arguments in favor of the rate hike in September and against a rate hike in September. On the one hand, we can ask ourselves why to prepare for a rate hike, even potential rate hike, if the possibility of such event is so low, only 15% or even maybe less by some indicators. But we can see that traders are getting more and more nervous as the meeting approached. And we can see that there are many articles which say that interest rates should be higher and the Federal Reserve should surprise the market and increase rate in September. It is said that the market is pricing in very low possibility of the Fed's hike. It's true, and of course it would be more convenient for the Fed if the market was ready to rate hike. It priced in 100% chance that the central bank will raise rates. This way, the actual rate hike wouldn't be a big shocking event for financial markets. And now only 15%. But analysts say that always something happens which prevents the Federal Reserve from raising rates. This year we had some problems in China, the economic slowdown, Brexit, and other factors which constituted the external risks for American economy and were one of the reasons why the Fed put off the rate hike. Analysts say that probably the Fed needs just to forget about the market, stop being a follower of what the market thinks, and just deliver a rate hike just to be done with it. Let's get on with it. Already said some analysts, uncertainty is not a good factor for the market, and although accommodative monetary policy is designed to help the economy, we now see that low interest rates are everywhere. We see that there is a 30-year bull market in government bonds, and we see that the situation may have gone too far, and maybe the Fed will make such a decision. In any case, there is a kind of big difference between what the market thinks and what the Federal Reserve might think. Actually, the actual opinions within the Federal Reserve are unknown to the market. Markets don't have good insight in what the Fed thinks. So this is why this event is so risky. So What are pro and contras for a rate hike in September? On the one hand, American labor market is in good shape. We see that the average growth of non-farm payrolls is high. The unemployment rate is close to the target level, and all is fine there. Financial market volatility is also rather low. The sharp moves in S&P 500 index were seen only recently, but in general, the volatility has been low in the past months. In addition, banks would lend more if they saw that the Federal Reserve's plans to raise interest rates and if it makes a small rate hike. And also a small increase probably won't hurt American economy much. It will help America to decrease policy accommodation a bit, but will be in line with how the economy is moving with American economic indicators. On the other hand, we see that although inflation has risen in the United States, it's still below the Fed's target level and probably will justify a rate hike only in December. Then the growth picture is mixed. The economic growth has slowed down in the second quarter of this year. There are indicators which don't show a very good dynamics. So we can't say that American economy is all well. Business investment is still lagging behind the growth in consumer sector, and this is an important problem. Then, as I have already said, market's pricing of a rate hike is too low, and this may prevent the Federal Reserve from raising rates this time. And the problem is that the Federal Open Market Committee, the FOMC, is too divided to act. Different policymakers of the Federal Reserve made different comments. Some of them were very hawkish. They said that there is risk that inflation will rise pretty quickly and that interest rates should be raised 1 or even 2 times this year. However, some of the policymakers said that inflation is too low and probably the Fed has to lift up inflation target and that further stimulus is needed. There is no need to hurry. So no unified opinion exists in the FOMC, and this decreases the possibility of a rate hike decision. And the last but not the least, we saw that after the Federal Reserve increased interest rate in December last year, there were serious disruptions in global financial markets. There were problems with China, and all in all, the markets of the emerging countries are very vulnerable to US rate hikes. We saw that hot money came to these emerging economies and will quickly get back to the United States once the market will see that the interest rates in America are getting higher. This will leave the emerging market economies without money in very poor state and create a very negative picture of global growth. And this is something the Federal Reserve won't like to see in future. So this is an argument against the rate hike. Taking all this into account, my base scenario is that the Federal Reserve will leave rate unchanged in September at 0.25–0.50 range, but will accompany this decision with projections of higher interest rate in December, and some hawkish comments about the US economy and about the interest rates. I think that the Federal Reserve would like to keep keep the image of December meeting live. It would like to the market to believe that the interest rate hike in December will happen, and to increase the market's pricing of December rate hike. So it will deliver some bullish comments for the US dollar. And these bullish comments will may be enough to support the greenback versus other currencies, and even to generate the growth of American currency. As the probability of hike is estimated only by 15% in September, then if there is no rate hike, the market players won't be very disappointed with the lack of a rate hike, and the negative impact on the US currency will be limited. So I believe that this September FOMC meeting offers some positive opportunities for the US dollar bulls, and that the US dollar may gain versus other Forex measures. There may be different risk approaches for trading the US currency. For conservative traders, it would be better to wait until the Fed's meeting is over and to see what the Fed has to offer for the market, and then to rethink trading strategy to maybe create a more long-term strategy which reflects the and opinions which the Federal Reserve is going to reveal. For some riskier traders which are ready to take this high event risk, then it is possible to trade Forex pairs. We will see in a few minutes on the technical charts which are the opportunities for that. So I think that the picture about the Federal Reserve should be more or less clear right now. And some words about the Bank of Japan's meeting. It will be early on Wednesday. And the position in which the Bank of Japan currently finds itself is rather tricky. The central bank already has a big monetary stimulus program in place. This program is really huge, and it is kind of very difficult for the Bank of Japan to think of something new to add to this program in order to support the nation's economy and to make inflation reach 2% target. The Bank of Japan has promised to reassess its monetary policy at the current meeting and to share its reassessment with the market. We know that currently the Bank of Japan has two main policy tools in place. It has negative interest rates and also quantitative and qualitative easing program, or QQE, monetary stimulus program, which also aims at making interest rates lower. And through this low interest rate, to generate higher inflation and higher economic growth. However, Japanese banks are not happy with this negative interest rate because they affect their profitability. And further another rate cut in Japan isn't very likely at this point. As for increase in other part of the Bank of Japan stimulus program, the asset purchase program or QQE, then it is hard to increase this program because there are not many assets left for the Bank of Japan to buy from the market. So the Bank of Japan may not increase, but adjust this program in order to make banking sector feel a bit better. Bank of Japan might try to lift negative pressure on banks by reducing purchases of long-term bonds and making the long-term interest rates a bit higher than the short-term interest rates. So the Bank of Japan will leave monetary stimulus in place, but make long-term interest rates a bit higher. And I believe that if the Bank of Japan chooses this pattern of action, this will hurt dollar-yen currency pair in the short term. The lack of further monetary easing will make the market feel that the Bank of Japan has run out of its options and that it is not able to make Japanese yen weaken and dollar yen get higher. This is why I believe that the initial reaction in dollar yen in this case will be negative. Then we would probably see some another reaction, purchases of the US dollar if the Federal Reserve increases its interest rate forecasts or delivers hawkish commands. Then traders will buy the US dollar and make the pair rise, but there is the risk that we'll get spike down in dollar yen, so a long downward shadow in this pair. So if you have bullish positions, then you need to think maybe of closing these positions at least partially, because stop loss levels can be hit during this Bank of Japan's meeting. Let's now have a look at the Forex market chart to see the exactly how the currency pairs are moving and what are the levels to watch. As usually, we start with euro dollar, our main pair. We can see that the euro dollar is still on the weekly chart between 100-week moving average at 1.1237 currently and 50-week moving average at 1.1095. The space between these two lines is getting more narrow, and I think that a moment when the euro dollar will break out of this range break from being squeezed between these two moving average is getting closer. For now, the euro is having support as the European Central Bank didn't hint at further monetary stimulus, didn't explain its further intention in details. So traders don't expect some big moves from the European Central Bank, and so they don't sell the euro. On the other hand, data from the euro area released in the past week show that further easing measures might still be needed. We saw joint economic sentiment indicator remained near zero. Inflation growth was confirmed to be weak. So we can see that problems exist, and the European Central Bank will have probably to act at some moment in future. For Now, let's look at the daily chart of the pair. Here we can see that there was a big bearish candle on Friday. The pair emerged from the levels around 1.1240 and declined to 200-day moving average at 1.1147, which is currently acting as the main support for the pair before some further decline. So if we go below this 200-day moving average, the next levels to watch will be 1.11, 1.1090. Remember this level from the weekly chart. It is the 50-week moving average, and 1.1060. For this will be the area of support line since November 2015, and this is a rather strong support level. All in all, the area of 1.11, 1.1060. I believe that ahead of the Federal Reserve's meeting, the euro dollar will be trading below 1.1196, 1.12. There is 100-day moving average at 1.12. It is now acting as resistance. It is also the lower border of the previous consolidation range of this pair, which is also acting as resistance. And you can see I have applied the weekly pivot levels indicator at this chart, and the weekly pivot level is located at 1.1196. It means that as long as the euro dollar is trading below this level, the outlook for the pair remains bearish, and we need to overcome this level to make some bullish positions. Further resistance is located at 1.1243 ahead of 1.13. This is the resistance line connecting August and September highs, and 1.1330. All in all, if the US Federal Reserve delivers hawkish commands, then we'll test this 2016 support line for the pair. And if the Federal Reserve doesn't offer enough hawkish hints, then the initial reaction in the euro dollar will be to the upside. But be very careful. I think that selling pressure will once again reappear as 1.1330 and higher at 1.1378. Traders will remember that there is monetary policy divergence between the European Central Bank and the Federal Reserve, and they won't let the euro dollar get very high. In addition, remember the economic calendar. Remember that they saw the ECB Mario Draghi's speech planned on Thursday, and I think that if the Federal Reserve keeps rate unchanged and if the euro dollar jumps to the upside, then Mario Draghi will try to say something which will make the euro dollar bulls cool down, and he will try to make the pair reverse down from these levels. So once we are above 1.1330 in the euro dollar, look for some signals that the pair may be reversing to the downside, and be ready to open short positions. On the other hand, look at support levels. I've mentioned currently the technical picture looks more negative than positive, and there is scope for the pair to go down at least to 1.11 ahead of the Federal Reserve's meeting, and probably if some really hawkish message is set by the Federal Reserve, then we'll get to 1.1060. And just to mention, the next support level is just above 10970. Yeah. We come now to British pound. The weekly chart shows that there was a sizable decrease in British pound last week. And we can see that the dynamics of the pair at the weekly chart reminds us not about triangles, but it is more like a rectangle and a sideways consolidative range between 1.34 on the upside and 1.2840 on the downside. We are now have now recoiled to the downside from the upper border of this trading range. We are now somewhere in the middle, and we are looking at the downside border of this trading range. Let's now have a look at the daily chart of British pound. The pair hit levels around 1.30 and found some support at this around psychologically important level. We can see that the pair has reached its downside targets, which were formed after it breached from its bullish trend. So now the break of this range has already reached its targets around 1.30. But we can see that the weekly pivot indicator showed that British pound is trading at the negative territory. Resistance is located at 1.3115 and also next resistance at 1.3165, 50-day moving average. And the pound is vulnerable for decline to 1.29, 1.28, 85 mark. Here we can say that last week there was the meeting of the Bank of England, and the regulator left policy unchanged, despite the fact that the central bank raised its GDP forecast for the third quarter and acknowledged the fact that so far British economy hasn't been hit by Brexit as much as expected. The regulator said that it was prepared to cut rates in November if its August outlook didn't improve by that time. There is a spike of uncertainty related to Brexit, as there is talk that the UK may start the procedures of leaving the European Union already in the beginning of 2017. And this creates negative pressure on the British pound, together with hawkish view of the Federal Reserve and the prospect of an interest rate hike in December. This would be positive for the US dollar and negative for British pound, and will make the bears test this support level, support line of 2016. And actually these are the multi-year minimums for the British pound, so support here should be rather strong. However, we can see that if the pair breaks below this range, where it consolidated after Brexit vote, then the decline should be sizable, and we see many commercial banks target 1.25 level in British pound. This corresponds to a scenario of hawkish Federal Reserve, together with further uncertainty of the fate of British economy because of Brexit. This looks logical to me, and I think that it is a very realistic scenario. As for resistance levels, they are located at 1.3115, 1.3253, and Hello once again. I'm sorry for my technical problem. I hope all is fine now, and we can continue and finish the webinar. So, as I said, the risks are for British pound to go to the downside. Couple of words about Japanese yen. Here we are targeting the decline towards 100 level on the results of the Bank of Japan. Here we have a support level, and from here the dollar yen may once again rebound in case of hawkish comments by the Federal Reserve. A close below 100 mark will be bearish, will represent a very bearish development. I think that if you are betting on the decline of the dollar yen, then some take profits should be located around 100 mark. And also note that at 170 there is 50% Fibonacci retracement of the move up in dollar yen from 2011 to 2015. So it is also important support level. Resistance is located around 103.26, 104.27. All in all, the general trend remains to the downside. And you can here see that some support is located at 132. A double top will get in place below this level. And Australian dollar, we can see that last week it tested lower levels. It fell to 0.7443 mark, but managed to close above this level. Still, the pair is approaching resistance levels, which are located from 0.7564. This is 100-week moving average, and also above this level, we'll get a chance to test 0.77, but here big sellers, big resistance is in place. So our main recommendation is to sell Australian dollar on its attempts to test resistance marks. And also pay attention to New Zealand's dollar. There is the meeting of the Reserve Bank of New Zealand on Thursday. The central bank is not expected to cut interest rates this month because the recent data from New Zealand were rather solid. But if the central bank makes some dovish commands, then New Zealand's dollar will decline towards 0.7050. This will be the target of this move. We can see that there is a candle with long upper shadow on the weekly chart, a shooting star, and it will be rather difficult for the pair to overcome resistance at 0.7360. Only some hawkish commands from the Reserve Bank of New Zealand and the lack of hawkish commands from the Federal Reserve will bring the pair to this level and make a target 0.75, but my main scenario is that the reaction here will be negative and will get down targeting 0.7050. So this is all for today, and let's now get a quick overview of what we have spoken about today. What is the outlook for the main currency pairs? To begin with, the upcoming week, this week will be very intense. The Federal Reserve's meeting is on Wednesday. It is a very long-awaited meeting by the market. The possibility of the rate hike, which is priced in by the market, is about 15%. It is very low. And my main scenario is that American Central Bank will leave policy unchanged this time because the opinions in the Federal Market Open Committee are very divided, and it will be very difficult for the Fed to make this hike decision. At the same time, there is necessity for the US to increase interest rate. This necessity is growing, and I believe that the FOMC members will forecast a rate hike by the end of this year and deliver this rate hike probably in December, as the market is currently underpricing the possibility of such events. This will be positive for the US dollar. We will also watch for comments Janet Yellen. They can also be positive for American currency. So I think that the US dollar may have some very positive dynamics on the Federal Reserve's meeting outcome. As for other currency pairs, we are seeing the euro dollar around 1.1150, and the downside targets lie at 1.11, 1.1060, and the decline below 1.1060 will bring a more sizable movement to the downside, targeting 10970. And strong resistance for the euro is located at 1.1237. This is 100-week moving average, and 1.13. And Mario Draghi, in his speech on Thursday, may try to talk the euro dollar down if it gets too high. So we should get ready to sell euro dollar if it goes higher, or join the sellers if support levels get breached. British pound also looks vulnerable versus its US competitor because not only of Federal Reserve's rate hike expectations, but also because of uncertainty created by Brexit. So 1.25 mark is probably the right target here, and the closer targets which we may be seeing this week are 1.29, 1.2840, and maybe 1.27. And finally, watch currencies like Australian dollar, US dollar, and New Zealand dollar versus the US dollar as well. There will be the meeting of the Reserve Bank of New Zealand, and given the fact that New Zealand's dollar has strengthened since the last meeting of the central bank, there is possibility of some dovish commands and possibility of the pair moving down towards 0.7050. This is my outlook for the currency market. I thank you for your attention, and I welcome any questions from you in comments to this video. I hope that you have a great trading week, and all the best. I hope that you'll be able to survive this difficult week of the central bank's meeting and even make good profit on these events. Thanks a lot, and see you next week. See you next Monday.